Hello and welcome to yet another video about technical analysis for European energy markets. This time we're going to have a look at key markets for the week starting 25th of March 2024. Before we jump in, just a little bit of an announcement. The Clever Markets Technical Analysis Academy is in full swing right now. The March cohort is progressing through the academy, and the next academy is launching in May. However, half the seats are already taken up. I am only letting in 12 people per cohort. So there is only another 6 left, and I haven't even started advertising it officially. The intake isn't even open yet. So everyone watching, listening to this, see it as a soft launch. The next intake is in May, and the last intake for 2024 is in September. So if you think that this is the year that you finally want to master technical analysis, if you want to make better trading decisions, if you want to protect your gains, and if you want to make more profits, then please consider this academy. I am very confident in saying that this is the energy industry's most in-depth and maybe only technical analysis course that is specifically designed with energy traders in mind. It's a very unique setup. You do get your weekly one-on-one with me, Marcello Colax. And also you do get your homework, and you get your quizzes, and you've got lectures twice a week, and you get unlimited ad hoc analyst access. And if all of that wasn't enough already, you will also get free access for the Clever Markets dashboard. So give it a go. Please contact me, send me a DM, or contact me on WhatsApp. Okay, so let's start with the TTF. Now, on the weekly chart, we are still pushing higher a little bit. So we can see last week we had a doji forming, which usually means hesitation. But the very high volume shows us that both sides, the bulls and the bears, were equally convinced. So overall, hesitation, equilibrium, call it whatever you want, but we didn't make, we tested both sides, but in the end we ended up where we started. So overall we can see that the market is still moving towards the 23.6% FIB at 30.29, and a move above this would launch serious gains, possibly towards the 35-39 levels. If we somehow resist here and 30.29 holds, then I would see maybe a little bit of a sideways move happening here. So, but what is the trigger levels on the daily chart? So on the daily chart, we can see we are moving higher now and within this channel, and the near-term uptrend is intact within this channel. And we can see last week we have corrected lower towards the 61.8% FIB. And usually this is like the extent of some solid downside corrections. Usually the market doesn't go any lower. You can see like the last swing, the previous swing here, yeah. This is the up leg and this is the correction. Also, we went to the 61.8. So I'm expecting more or less the same happening here, moving higher and finding support at 61.8. And now the interesting thing is we did end the week with a bullish engulfing candle. Aha, so this usually means bullishness ahead. But in order to validate the pattern, we need a move above 27.94, which is the high of this bullish engulfing. We can also see that stochastic is not yet giving us a bullish signal. So bullish signal would be moving down here into oversold territory and then moving back above oversold territory. So this would be the bullish signal. But we don't have it either yet. So for now, I would like to sit on my hands a little bit and wait this out until we get a clean break higher. Overall, the anticipation of gains is reasonable because the 8 and 12 exponential moving average, they are still pointing higher, as is the MACD. So I believe that we could potentially bounce. Now, if you think that waiting for the 27.94 close is a little bit too late, it's fully understandable. For that, I would suggest maybe looking into the intraday chart. So right now, this is the 15-minute chart, but we can also try the hourly chart. And as soon as we start seeing the flow of higher highs and higher lows, or simply a break above the channel, then this would suggest that the uptrend is in full swing. So let's have a look at the 15-minute chart. We can see here that, there you go, that the oscillator of my choice, the stochastic, is swinging lower. That looks bearish. And we can also see that the MACD obviously topped out. This also looks bearish. We can also see that volume was like really high on the two red candles. That is also bearish. So what I'm saying now is I don't really have a preferred direction because the tools would suggest losses, but we are obviously also making higher highs and higher lows here intraday. So what gives? I think what we should do is wait. So a move below 26.93, which is the trough here, would possibly continue the downtrend, or to be honest, maybe even a little bit of a sideways trend between 26.09, 27.94. So maybe something like this here, yeah? This could be happening on Monday. However, if this support holds 26.93, and if we subsequently break above 27.94, the most recent high, then I would say we have a real uptrend on our hand. This marginal break above the channel is almost not worth mentioning, but what is more interesting to me is the flow of higher highs and higher lows. So keep an eye out on these levels, 26.93, 27.94. And can you see how it's all slotting in really nicely together? We'll get our first signal here with the break above 27.94. And this also means on the daily chart, this would mean a break above the bullish engulfing candle, so confirmation, so we could move higher. And then the next reasonable target is the upper channel border, which is at 31.22. And remember, on the weekly chart, we only need to move above 30.29 in order to launch a more substantial up leg. So this is how this is called multi-time frame analysis. So we are trying to identify targets and validation and invalidation patterns on different charts. And the price moves from the lowest chart and then to the highest chart usually. All right, that is all for the TTF front month. We are now having a look at European carbon emission certificates that have, over the past couple of weeks, maybe even months, very, very closely mirrored activity on the TTF. So let's have a look what's actually happening here. So on the weekly chart, we can see that the market is pushing higher, and we are now testing resistance at a 38.2% fib at 62.6. And if this level holds, then we would potentially move sideways a little bit within the 51.08 and 62.6 area. But the high volume and the continued green candles and also tools across the board, except for the 8 and 12 exponential moving average, they are looking increasingly more bullish. So I would assume that a break above the 38.2% fib is likely. And then we could move all the way to the 50% or even the 61.8% fib retracement. If we zoom out, we can see that overall, the long-term trend, medium-term trend, we are still bearish and we are just correcting higher. So what happens at this level will have to be decided once we are there. But for now, we are simply moving higher in an underlying midterm downtrend. And we are on the daily chart here, and we can see that with this rising trend line and this flat horizontal trend line, we are essentially forming an ascending triangle within a rising channel. So what does that mean? So ascending triangles, in this case at 62.8, this would be resolved to the upside, and we would activate a target in this area here. Well, let me zoom in a little bit or zoom out. There you go. We should go all the way until, so we are measuring it from here to here. So yeah, this, so the highest point here is applied here, and you can see the target is somewhere, the triangle target is somewhere around here in the 72 area. We can see that in the 70 area, that is the falling wedge target, which is this length here. applied to the breakout direction of the falling wedge down here. So you can see we are looking for for a target in the 70.2 area, somewhere around here. However, we really have to wait for a push above 62.89. Then it will be all activated. So as for now, it seems as if we have bottomed out with this candle. So we have like this is called like a black crow's candle pattern. These 1, 2, 3, 4, 5 candles here, because it shows that even after 3 days of losses, the market is still continuing higher. The pattern isn't all that clean. However, we also have a second bullish candle pattern, which is the bullish engulfing here. Yeah? So this green candle engulfing this red candle. So overall, it's all looking fairly bullish. The only thing that's a little bit amiss is this falling stochastic, which is still giving us kind of like bearish hints. What does that mean? So I feel that we need to wait for what's happening on the chart, not so much on the tools. So I would say maybe a tiny tick lower or like a weaker open maybe, but ultimately the idea is for the market to break higher and then go all the way to the 70, low 70 area target. If we break below the 50%, then we could make it to like the 61.8% fib, which is also the channel boundary and the triangle boundary. And if we break below this, then we would simply undo the near-term uptrend. But I feel if we should find support somewhere in this area, genuinely. So even if we break a little bit lower this morning, ultimately, I feel we are still heading higher. All right, on the daily chart, on the intraday chart, we can actually very precisely see if we see a break lower or not. And that would be a break below the 23.6% fib, or also it's like very close to this trough. So in the like 61 area, there is support. If we break below it on Monday morning, then we could potentially go to like the 50% retracement, which is also the trough here. If we break below this, we could make it to the 61.8, and then in the worst case scenario, unwind the whole thing. I don't think this here is likely to happen. I feel that we will find support somewhere in this area. We have to take it 1 fib at a time, and then potentially we could move higher again. And you can see that this intraday falling wedge target is here as well, and that is near 62.89, which is also the high here. All right, so what does that mean? In summary, let's summarize this whole thing. I want to have a look at this area here. If we break lower, then we first see a correction lower on Monday morning before continuing higher. Ultimately, a break above 62.06, so it can happen immediately without a break, that would simply continue the uptrend. An uptrend continuation on the daily chart could mean a test of the 62.8% fib, and a break above this would simply lead us to the 70 or 72 range. And if we are making it to the 70 or 72 range, then we would end up somewhere here, which would then offer some good resistance for the market to turn lower. And that is all for the European carbon emission certificates.